Tal Miller, who will be the moderator. Tal is the CEO of Fibonacci. Tal, where are you? Perfect. And with him, we have Moshe Kimchi, CEO of Nima, which we today learned that we studied together. Perfect. Omer Ungar is the country manager for MasterCards. We have Noah from Unifast, who's doing the VP of Business Development, and Eyal Shimoni, EVP product from ICE. Everybody are here? So we put your pictures so it'll be easier for you to know where you is. All right, so we have two mics. So you'll have to share and go.
So, first of all, thank you, Tom, for the introduction. And we're the first panel for today, so we're going to try and make this as interesting as possible to get everyone in the mood. We're going to have some interesting discussions, a lot of topics that are bothering a lot of people and are interesting for us, I guess. I want to start first with you, Omer. MasterCard is a global company. You have basically reach in almost every country in the world. And I wanted to get your take on what do you think are the biggest challenges for payments today in the world?
Yeah, happy to. So good morning, everyone. Happy to be here. Many challenges always for payment technology. I mean, we still need to solve, the friction in present transactions. We can, there are some regulations that we still need to embed. But for me, top of mind and the biggest challenge as payments become more and more digital is actually cyber. Financial institutions. MasterCard is not a financial institution, but us, as well as our clients who are financial institutions, are the entities that are most attacked, of course. And usually, us, of course, and banks as well, especially banks in Israel, are well aware of the cyber risk and protect themselves pretty good. But it's not only about issuers and acquirers. There's many companies along the value chain of payments. And I think that right now, one of our biggest challenges is to continuously map all those entities because business model evolve, the type of company that are taking part of payments evolve, and not everyone comes with a DNA of compliance. So we need to continue and map it. We see ourselves as an ecosystem company. And I'll give you a short example. If an insurance company or even a coffee shop downstairs that does online deliveries, if they're hacked, eventually, what's being lost is identities. In Israel, identity theft is not yet a problem, but what also is being lost and what everyone is worried about is credentials, the card details. Now imagine that you see fraudulent transactions on your statement, or your issuer is calling you and telling you your card was exposed. Is that it? We will send you another one. Today we're doing digital issuing, but so if it happens once, okay, if it happens twice, if it will happen 3 times in less than, half a year, you will start to lose trust. And trust is MasterCard's biggest asset in payments. So this is why we're continuously monitoring for cyber risks, all of the ecosystem, the banks that work with us, their merchants. So I definitely see this as the biggest challenge.
Yeah, I know we talked earlier, and I know that this is a topic that you have a lot of things to say about. So I think in specific, how do you reconcile between security and convenience for the customer? I mean, at the end of the day, we want to have a process that is secure and as risk-free as possible, but also not to cause customers to run away and choose other payment methods.
Exactly. Seamless payment is the key for high conversion rate. Okay, so on one hand, like Omer said, we must ensure the security of the transaction. And the cardholder, we as the consumers, we must feel very secure in our payment method. Same for the merchant. The merchant needs to know that he will get the money, he will be paid. There will be no leak of information from his terminals or website. For that, there are companies like Hive, who are PCI clients, most of you aware of. And we're doing the tokenization for the merchants. The merchant is not allowed to keep the card holding details in his terminals or in the street server. And we convert the card numbers to tokens. And so the next time when we as a consumer doing the deal, we convert it there, forwarding the transaction in the acquirer, and in that way, we making another progress in the secure without affecting the convenience of the payment. But having said that, we as a consumer, we are willing to pay a fee for the security. And I mean for the 3D secure process, for those of us who are not aware, when we're doing an online transaction, in some cases, the issuer decided to challenge us. And we want to make sure that we are the cardholders, we are doing the transaction. So challenging us to put a pin code that is standing up. It's a hassle, right? But we as a consumer, we're willing to do that, willing to do that for our own security.
Nora, one of the things that the Tomer mentioned is also the different models that we're seeing today, different both I would say payment models, different payment technologies, different even shopping and consumer models. I know this is something that Unipath is dealing a lot with, so you can elaborate how you see things and how things are emerging in the last couple of years.
Morning. I'm Noah and I'm from Unipath. And just to say this, the context of Unipath is an embedded payments platform that helps B2B platforms and marketplaces embedded payments very easily. So we can enable. Sorry, please speak up. Yeah. So they can enable their SMEs, their end users, basically use payments much seamlessly. So we're embedded finance solutions and fully white label. And well, I'll speak about embedded payments approach maybe later on, but I wanted to highlight a few new technologies or approaches in Unipath were implemented. So it's everything related to faster payments. Okay, so while my fellows here are talking about the payments, secure payments, which is something that we're dealing with, also PCI compliance, etc. But we are trying to see, especially for our end users that are SMBs, the cash flow for them is crucial, and they have a lot of technical difficulty. How we can enable them to get paid faster. So we're today we are using the open banking technology in the UK. We are regulated by GSA, so we are currently focused on the market. So open banking, while it's still a new technology, it's still evolving and emerging. The users that are using open banking transactions, we see that they are getting the money to their bank account within 10 minutes. And same means when you're talking about SME that needs the money today in order to survive this week or tomorrow, to get paid in 10 minutes as opposed to 3 days, it's something that we are seeing as something very, very important for them. We're also
Sorry, 1 second. It's hard to hear, so you need to put your mic a bit closer.
Yeah.
Sorry.
No, that's fine. You can hear me? Yeah. Okay. Did I get from the start? No. But basically, so yeah. So open banking is really a technology that we believe in, still evolving as I mentioned, but we see it's something that with time will be more and more easy to use, and obviously will ease on the end user to get paid faster. And we see our end users. So I'm repeating a little bit just so we understand what I was talking about. Our end user are getting paid in 10 minutes. So it's really important for them. Another interesting technology that we implemented in our system is split on hand. Okay, so while we are enabled multi-party transactions, we see that one of the main pain points is reconciliation, how to reconcile payments at the end of the day. And our ability to split and deduct the fees, split the funds, deduct the fees we're taking and the platforms is taking on time and not let the end user or the platform dealing with any reconciliation processes or manual processes is something that we see that helps them to get, obviously, to get paid faster, but also to reduce operational costs and working hands around the reconciliation. Another thing, it's not really a like cutting edge technology, but it's a decision we take at Unipass to basically the time to reduce the time that it takes the money to being settled in their bank account. Well, many players are settling money of credit card transactions up to 7 days. We enable them the money to be settled after 48 hours. And in the end of the day, all of these components together enable our end users to get paid faster within 21 days before the invoice due date, let's say. So I think it's something that's a challenge, and we're trying to see the results.
Okay, thank you. You've mentioned open banking, which is definitely a very interesting, I would even say sexy development in the recent years. But still, I know that banking is a very big challenge throughout the world. There are a lot of unbanked people that are struggling with banks. There are even more people that aren't happy with their current banking solutions, whether these are customers or companies. And Moshe, I know that this is something that you guys are on the crusade to try and fix. So how do you see this?
Hi everyone. So you're right. You can say the bigger the pain, the bigger is the weight of fintechs. Because I truly believe fintechs are the solution for responding to these pain points in the financial world. There are more than 2 billion people around the world that are considered unbanked. And as a profession, you can count at least 270 million people that are considered migrant workers. So migrant workers are typically characterized they're struggling with opening a bank account. So it's a subcategory of the unbanked, which you mentioned. Some of them use cash, obviously, but most of them, you'll be surprised to hear, use digital accounts, especially in emerging economies, in Africa, in Asia. These are very common and growing solutions for these communities. Actually, Nima created the first digital account in Israel that provides a financial solution for those migrants that came to Israel. From the first minute that you need to deposit the fund, and then you need to send the money back home, and then you want to use the rest of the funds here. So we provide also a payment method, Visa card. So we'll have other solutions and P2P transactions. By the way, all of these services you can find in the traditional banking system, right? So what's the catch? The point is that these clients are unbanked. They cannot open a bank account, or it's not easy for them to access the traditional banking system. And that's exactly the point when fintechs find the solution. Add to that the lack of language, the high cost in the banks, which actually pushes them away from the traditional banking system. But this pain is not a pain that is reserved only for the migrants, especially not in, you can take Israel, for example. There are many Israelis that are underserved. This is another category on the, let's say, unbanked, but there are a lot of Israelis that are underserved in the financial services that they acquire every day. Let's say I want to transfer money today in 2023. I use, Moshe, I have at least 2 bank accounts in the largest banks in Israel. I want to send money, let's say, to Spain or even to Asia, to the Philippines. What has been offered in the bank is actually a SWIFT system. Without even knowing, every transaction I made is going through the SWIFT system. And this is a very expensive, limited, old-fashioned way to transfer money in 2022. So not only migrants are unbanked, but also Israelis and many other communities around the world are underserved because the level of service that they get is not sufficient. If you can compare it to NEMA, so if I use the NEMA account, I can transfer money not only to bank accounts. Bank account is one layer of remittances. In 2023, and Omer maybe can add to that, there are many alternative as a payment method. People transfer money not only to bank accounts, they want to transfer money to cash pickups, they want to transfer money to wallets across the world. And this is something that you cannot get today in the traditional banking system. So I used to be underserved as well, but now I'm not. I have my NEMA account, so I use it pretty often. And I think that's the beauty. You can be digital. You can be provide a solution to a certain pain. But I think all of us need different solutions today. We see it in many other aspects, say in interests, right? But the payment, the cost that we pay in ethics and transactions are extremely high. And this is where we find the solution and the crack that we can provide added value to our clients, not only migrants, but Israelis as well.
I'm going to ask something that might cause some post-traumatic triggers in the audience, but we're in 2023, so everyone's forgotten about COVID, but at least until the next time. But it still had a lot of impact, especially in the banking industries, because I know that a lot of the banks, everybody felt it became more conservative, less appealing for people, less serving. Have you felt this as well?
I think all of us felt it. And we still do, right? Maybe it's the post-trauma now after the COVID, but you can still see the trend that banks are becoming more and more digital, or at least they market themselves as digital, and they're closing branches. They shifting the way they used to serve the clients. What we actually noticed during COVID, if we saw, let's say from 2015, can say that NEMA is in business, most of the transactions were made into direct to banks. And I'm not talking about transactions from Israel, generally. So you see from 16, there is a shift changing gradually, but on 2020, we saw a huge peak in transactions that are shifted to an alternative solution, such as digital accounts. Take China, for example. Most of the Chinese beneficiaries would prefer not to receive their funds into China banks. They would want to have at least some of the funds received through China UnionPay, WeChat, Alipay. So we realized that actually what we just spoke about, the underserved clients globally, when they come to the bank, they have only one option: to send money to banks. And then we realized that all this network that we built during the years is actually an asset. And I completely agree with Omer. One of the main things that you need to maintain is trust, not only on Mastercard, especially on FinTechs, by the way, because we're not backed by Mastercard, right? We're FinTech, so it's extremely important. And what we did is actually we launched an API product for financial institutions and for banks that understand that the trend is moving funds from banks to bank, from bank to bank, but from digital accounts for an alternative. It could be cash pickup, which were extremely common during COVID because people were limited. They needed the funds, right? They needed to deal with money. So they preferred cash pickup because it was more accessible. You can also see data of the cash usage in Israel during 2020 and see that the cash increased in Israel. So we actually developed this API solution for financial institutions and banks that now can implement the ability to transfer money not only to bank account, but also to an alternative payment method, advanced payment methods such as cash pickup, wallets, and these services actually are so much convenient, and the transfers are done in real time. This is extremely important. Noah just spoke about 48 hours, 72 hours for merchants, but individuals want to receive the money in real time. And the only way that can happen is in real-time payment with wallets. We also support bank accounts, but that's really old-fashioned.
I think so. I think you hit the nail on the head by saying trust, because without trust, there cannot you can't maintain a payments ecosystem. And in times of trouble, the trust is one of the first things that start to deteriorate. I think one of the biggest influencers on trust is regulators, which you mentioned, Omar. Regulators are responsible for, or at least should be responsible, in my view, for maintaining this level of trust with consumers. How do you see this developing? So are there any global regulatory trends that you guys see?
Yeah, first of all, I just want to go back to what Mark spoke about. I think offering financial services to the underbank, it's not only a business opportunity, it's a good cause, and there are plenty of research, including research that we do, that shows the positive impact on the entire economic situation. I'm very happy to see that this is evolving. Those underbanked people, one of their needs is to send money abroad, so it's beautiful to see how NEMA develops into offering solutions for this as well. Regarding regulation, so I'll speak on a mix between what we see and what we would like to see, and I would dare to say that it's not that far away. So I want to speak about two things. First of all, harmonization of regulation, and then introduction of regulation. What do I mean by that? So let's start from Israel. Israel is a very small market, relatively, and it developed through the years in a unique way that has advantages and disadvantages. For example, merchant-funded installments, which is now called the NPL, and many companies raise their own money, exists in Israel for decades, including some loyalty mechanism, including some strong customer authentication mechanism. All of them were invented here. All of them very local. All of them were good for the local market, up to a point where it became a little bit of a bottleneck or a barrier for innovation and competition. And I'm very happy to see that the regulators in Israel in the past couple of years are pushing it towards a more international standard. So we saw this with the EMV migration, with a big part in this, and then we saw Google and Apple coming. We continue to see this with the strong customer authentication. What was adopted here in Israel is just a fraction of what exists in Europe, but it will come, I believe. But I see that the regulators really, doubling down on this. And when we talk about open banking, and I was happy to see Ilanit here in the crowd. What Ilanit is doing in Israel, she's leading a work based on the Berlin Group standards, which means that from day one, it will be international standards. It will make it easier for Israeli companies to develop things here and to offer them abroad and vice versa. And recently, we saw an exemption introduced by the legislation that a FinTech company with an OECD license can work in Israel. I'm surprised by the amount of attention this exemption brings and the amount of companies that are taking interest in the Israeli market. And this is, to me, a direct result of making sure that there is, as much as possible, the same regulation everywhere. And it's especially important for a country like Israel, and it continues with faster payment, with ISO 222, and so on. So this is the first thing, to harmonize the regulation. Second thing is that there are areas where I think the market wants to see regulation, and main area is crypto, of course. When there is no regulation, there's a lack of trust. There's things like we saw when companies take money of investors and customers and collapse eventually. And I understand why regulators are taking their time. It's very, when a regulator is introducing a regulation, it's also taking a little bit of ownership on the space. So they're doing it slowly, but I think it's very important because the technology, the underlying technology, without talking about Bitcoin as an investment opportunity, something completely else, that the underlying technology in blockchain has a lot of potential, and we see also central banks talking about CBDCs, etc., including Bank of Israel, who's very advanced in that. And we will see stable coins and maybe CBDCs like digital euros and maybe the shekel here happening only if there will be a regulation. So there are certain areas where regulators will create the market. And if they want to introduce regulation, then it might remain in the shadows, which is not good for anyone.
I know we deal a lot with different merchants, different industries. So the general consensus about regulators and their role is a bit non-existent. Some people think that regulation is a good thing and it helps with the merchants' needs and it helps stabilize this industry. Other people look at regulation as something that prohibits growth and actually kills innovation. And I know, yeah, you're dealing with a lot of companies from a lot of different fields and areas. So basically, anything that sells in Israel, do you see any underlying needs of companies in particular industries or across the board that you see them evolving or changing in the last couple of years, or what is the future trend with merchant?
Maybe we'll take a few words about Hype. It's Hype before, and we say Hype, although there's no E at the end. Hype is initiative of handling your payment. It's a merger of 4 companies, 2 payment gateways, 1 terminal vendor named Speed previously, and the 4th company is Digital Invoice. Basically, what we do, we enabling merchant to accept payment which are not cash or check. Okay, so alternative payment methods, Google Pay, Apple Pay, Bill, Paybox, credit card, of course, and any new payment method that we enter the market, we will probably support. So regarding the changes in the merchants, so the way that they accept payments. First, we see the online and the physical worlds combining. Merchant or small merchant that typically sold only physical stores. They don't want to open online store. They want that the cashier will merge the online store. They want to manage the warehouse, okay, from the same spot. And they want to be able to do reconciliation of their sale. Okay, they're selling in different platforms, and they want to make sure that they're receiving their money. And we spoke about here the complexity of getting paid, or the different method of getting paid, and the different ways of any payment method in the settlement, making it almost impossible for the merchant. And that's why we have companies like Hype or Payment Gateway to make it more simple for the merchant. And we are fine with the complexity. That's our job. Okay, so not to be more complicated. Okay, the account-to-account payment, maybe cryptocurrencies that could enter. That's good for us. That's it. And regarding the NIMA, like the one. NIMA and companies like NIMA solving the problem not only for the unserved population, they also solving the problem for the banks. Someone who established and managed the bank activity in China for 8 years. Here in Israel, we didn't want that Chinese employees to enter their branches. They cannot support them, cannot give them service. They need 50 people that speaks only Chinese enter to the branch. In exact for service, you cannot serve the other people. So companies like NIMA, they're not disrupting them. They're helping the market.
I completely agree with some of your points. I think the biggest challenge we see for merchants today is one, how they can move from being a physical store to being an online store or an omnichannel store. The second thing that you've also mentioned is how they can reduce the complexity because they are not experts in payments. That's why they rely on companies like that. I think the third most important challenge that I see, and I know Noah, you're going to agree with me on this because I know it's your very interesting topic for you guys. It's embedded payments. How we can turn companies that may not be fintechs right now into fintechs or adding this payment capability or disadvantage.
Okay, so it has a lot of faces. This kind of buzzword, embedded finance, embedded payments. So just to align, so embedded finance is basically how we see Unified, because everyone has its own translation for that. So how to bring financial services or payments in the right time, in the right context. So the platforms we are serving can implement it very easily. And our customers are not fintechs. They become fintechs after we implement our solution, basically. And how their end users can really use the payment solutions in their current flow, the current system, day-to-day management system, without needing to go and look for any solution or third-party solution. So this is our approach and how we see it. And basically, we enable. Today, we are embedded finance solution, but today we are focusing mainly on the payments side. Basically, we enable our customers very easy integration. Okay, not everyone wants to give you the heavy integration that takes 1 year or so. So we kind of build a very easy technology to use and implement. So it is very easy for them to handle experience without the hassle. We are the regulators and what the risks and liability between us. So they don't need to deal with any regulation. Let's say this way. Let's put it this way. And with integrating or collaborating with us, they're able to start monetizing. I'm sure that part of us are aware of the movement from SaaS to payments. Okay, SaaS became very competitive. It's very hard to increase prices. You see, in fact, a lot of companies increase subscriptions, prices, etc. So payments is really a nice revenue generation channel for a lot of SaaS companies. And this is the strong connection between us and our customers and our markets. But I wanna elaborate about end user. I think it's one of the most important things here, because if we enable digital platforms to implement payments very easy, fully white labeled. By the way, the practice is key, because if they introduce their own payment brand under the brand that their customers trust, we see the conversion. In fact, we see more than 80% of our end users are new to digital payments. They were never used any digital payments. So this use the outdated bank transfers, cash, checks, and now when they see a brand they trust, they adopt the service. They're willing to adopt the service. And when they can find the right service they need at the right time, within the current flow, let's say accounting software, the end user need to raise invoice. If they can embed payments very easily, they can get paid faster than that, and don't need to go and be redirected to another third-party provider and then to do the KYB, KYC. And there's a lot of frictions there. And then to get back to the system that under day-to-day, and then to complete this payment, we can decrease the friction there. But how to see embedded payments at the times. Usually, the ability to orchestrate many providers behind the scenes just bring the best of breed for our end for our country. One integration, and the more financial services we have, the more financial services they can their customers, and by that increase lifetime value, stickiness, etc. Again, so
thank you. I can sit and talk about payments for like 3 days, but Charlie is already making angry eyes at me. So I think our time has exceeded. I'd like to thank everyone for First of all, thank you guys for your attention and thank you guys for the insightful answers.